Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today's Monday, December the 15th, and this is the Moneyball Morning Report for the Benzinga Pro platform. As you know, I am in Tokyo, and so we're going to get maybe 3 of these a week. Probably going to record it sometime around this time, so inventory will be different. It'll start to correct probably a little bit later, but this is what we've got going for us, so let's roll with it as we can. Charts by TrendSpider and Gamma Flows by Menther Q. So this morning we are looking at the 0 DTE put wall at 6,800, the 0 DTE call wall at 7,000. This was 68.50. It has been rotated up for the new lines in the sand. You can see that we're sitting in very sideways formation. VWAP is flat to slightly up. We are in a buy the dip formation that is continuing. Why is it a buy the dip formation? You can clearly see we are holding higher lows. Now, watch for those wicks because they have been fairly significant. Okay, inventory is quite long here from this opening range, and so we're going to watch this value area low, the 68.18, as the potential floor, but I would suspect it is much higher, closer to the one-day minimum, which is 68.35. If we have a look at the broad formation, we can see that inventory accumulation is occurring at that 68.50 wall that I mentioned. And so we're going to be looking at the breach of that 68.50, 68.52 for continuation to the upside, right? That's what we're going to be looking for. Next stop after that will be these edges here, and that would be 68.56 all the way to the VWAP at 68.61. And if it continues, because the shorts are probably going to get squeezed if they don't unwind pre-market. If they unwind pre-market, we'll probably have ourselves another run-up. Notice what price formations have been looking like. In general, it's up and down, and then down and up and up and down and down and up. So it's just wash, rinse, repeat in a much broader, widening formation. And so that formation should begin to collapse and move. It is still a buy the dip formation, and I do believe that although we might have retracement, we're setting up for Santa Claus Rally that could easily get us into this call wall at 7,000 to the upside. So that would be pretty nice. As I mentioned on the market kickoff last night, because the VIX expires after the current expiration that we have here, we're going to have a flip of flows, which could make the beginning of January a little bit sticky. But we'll see about that. Right now, what we are seeing is dips or buys. So we'll rotate back into that. The anchored VWAP from Friday's session is 68.75. That seems like a legitimate area for a final target up into 68.87. Below, we have the 0 DTE put support at 6,800, and then once again that large put support at 6,700. The line in the sand for waiting around for that long, my thought is if it loses 68.30, I would say don't try to buy the dip until it's recovered 68.30, and you can see where your risk threshold is from there. Right, so that would be my above below, as it were. All right, let me erase these lines because I don't want to see any of these annotations. Here we are looking at the NQ. Same sort of thing, inventory a little bit long. It does look a fair bit weaker than the ES, but it's still in a flow that could give us higher lows. I don't like this line, so I'm going to delete it. I think this line's a little bit arbitrary. Okay, we can see higher lows, so we know that the traders are buying the dip. We are sitting above the VWAP, just like the ES. We have positive momentum. So it's all about how well we hold the floor and how far we move below. Let's see what the gamma lines are. We've got our 0 DTE put support. Whoa. Okay, the 0 DT put support is 25,400. The big put wall is 24,000. That's very far below. The one-day minimum sits at 25,200. If it loses that line, be careful buying the dip. It could fade pretty significantly. The gamma flows show us 25,000 and then 25,100. So we definitely want to be careful if it loses 25,200 because there's a 100-point pocket underneath there that it could fall into. The value area low is going to be the number that the NQ has got to get over. Again, remember this one is a bit weaker than the ES, and that really is a rotational flow. Everybody's talking about, oh my goodness, what's going on with the AI trade, and then, you know, Gemini coming out and beating the pants off Sam Altman in some new whatever that they were measuring. And so I think people are just a little bit nervous about everything, actually. So this one's going to be interesting to see how well they recover. Let's take a look at where inventory's been accumulating. Looks like the top of the range, 25,279. So we'll say 280 down to 25,240. So we got about a 40-point range. That's a fair place to make money. You know, buy the dip there, but you want to be careful as if it leaks down past this 25,200, you know there's going to be a problem with a potential deeper rotation. So I would trade this box if it stays here. Realize that inventory does tend to correct. Notice in one way or another, if we were looking at Friday, we could see that inventory held solid, faded into the pre-market, and right about 9 p.m. Tokyo time, which would have been 7 a.m. Eastern, inventory began to correct, right? So we are going to see some sort of inventory correction. Just watch out for that and prepare accordingly, okay? So value area low, 25,300. 0 DT put support, 25,400. The call walls, 25,900, and call resistance, 26,000. Those are very far away. And so this also tells me they're looking for rotation to the upside. If this had collapsed in this particular way, you would expect, if they weren't expecting a reversal, you would expect the walls to come down with it. The 0 DT put walls to come down, the call walls to come down. As it sits, they're still far to the north. So this tells me they're expecting that Santa rally right back into the volume pocket up here. So this is the undercurrent of the broad options market. This is what they are thinking. So they could be right, they could be wrong. We'll just see where they're positioning. Upward flows, you're just going to walk through these edges. Downward flows, we only have 2 gamma lines that come down into 25,000 before there's $1,000 movement into the low pocket. So I don't see that at all. I actually don't see that at all. All right, let's go to micro Bitcoin. So if you watched me on Market Kickoff, I got on the back foot because the Bloomberg channel that I was looking at on the web had to translate from Japanese, and instead of futures where I went to, it just went to markets, And so it was actually giving me what it had done the day before, not how the futures market was setting up. And so the big gap down that I was reading is all the flow from the prior day, but Knucklehead Fred over here didn't realize it was showing markets and not futures. And so when we opened up pretty much even, I expected it to have a fade, and it didn't. And so we are in a buy the dip. And that includes what's going on with micro Bitcoin. It filled the gap very nicely. Really nice trade. Many of you know I went long at the recovery off of the first 5-minute candlestick formation, and then rode it literally all the way up. It did not, it closed on its own to the north. Okay, so what are we staring down here? We're looking at price action that is really a bit sideways, but the put wall has fallen to 85,000 and the call wall is 97,000. So they are also waiting on some kind of rally. I'm just not sure that it's got a rally on it. That being said, they are buying the dips. They have come into the 90,000 area. That's where the old put wall was sitting. There's also a call wall that was sitting there. So there's a lot of congestion here. How do you know that? The volume profile, see how this is bimodal? Bimodal means there are two areas of big pockets. So there's a big pocket of trading here down at 90,000, a big pocket of trading here up at 92,000. That's where the old, most recent call wall is, and now it's moved itself all the way up to 97. That's a lot of price motion. So rotationally, they are also preparing for upside motion. Where is that going to move out? My thought is if it gets above 90,000, let's see where it is. Thursday's anchored VWAP, that's at 90,900. It's going to have a much higher probability of heading up to 92,000. As long as it stays under 90,000 here, the rotation down is still the most likely. If we do a trend line, you can see that there's a fair bounce here, right? And so 91,000 could be the zone where it just stops dead. I think this one's very sticky to trade. It looks a lot like oil, maybe. All right? It just looks very, very messy. So I'd be careful trading this one. Volume pockets are very wide and jagged. So wait for the floor of a formation to go long. Wait for the ceiling of a formation to go short. All right. Before we go to any of the others, I don't want to forget, but let's go to silver. Silver's in a very interesting space. Let me make sure that is not, let's see. Okay, it's definitely not 3. It's got to be 2. So here is silver, and the reason that I want to just touch on silver is the following. On Friday, we had a massive liquidation. It took out 3 days of motion, and traders are buying the dip. Here's the thing about silver. When it gets on a massive run, which is pretty rare, right? It gets on these runs and then sits in these wide pockets for months, just going sideways. And so it had a jagged couple of months between October and November. And if we draw, let's do Fibonacci here, right? Here's the wave. Here's the last wave. Now, 2 things are happening. One, this call wall at 64.75, it was 64.50, but this call wall at 64.75 is a very big call wall. And what happened on Friday with all of the downside rotation, there was not a lot of call buying on the way down. There was not a lot of put buying on the way down either, but they're also not selling puts, meaning the rotation to the upside, they're being very cautious about. So what's the bottom line for you and me as traders looking at this, you want to, if you're trading silver, you want to make sure that you look to the left and you trim your gains going into prior resistance. That would be old support. Okay, so the call wall for the 0 DTEs is 63.27. It's also value area high. We want to watch out for that. Dips are still buys, of course, but it does not look like a runaway train. So be very careful buying the breakouts. Make sure that your risk is managed. Now, I'm not saying to you, don't go long silver. What I'm saying to you is, if you go long silver, make sure that you are measuring your rotations properly and prepare a place to take some gains. All right, so this target at 63.01 and then 63.21, it looks like it's got maybe 20-cent moves to the upside, which of course, as you know, is a ton of money for silver since it is a very leveraged and large instrument. Just if it starts breaking candlestick supports 2 candles away, you know you've got an issue. My thought would be very careful holding this contract thinking it's going to rotate up. It's not necessarily the case. All right, let's get to oil. Someone asked, hey, are we still in rollover? And the answer is yes, all these contracts are still in rollover. Of course, oil and gold rotate every month. So what we have here. Okay, so what do we see? We had a pretty solid bounce off of the floor where we're sitting. Oil is testing higher lows, but we're also coming into very significant resistance. Remember, the goal is to keep prices down so that inflation does not take hold. Here is the flip side of that. Because we live in a capitalist environment, there's not going to be a lot of impetus to invest in the region if price action continues lower. And indeed, the U.S. break-even spot, depends on who you ask, is between 50 and $55 a barrel. And we're sitting here at 57. And so I would expect, just like we did a farm subsidy, I would not be surprised to see some sort of oil subsidy or oil company subsidies to keep these guys in business as price actions continue lower. I don't know, but that's my guess. Where are we accumulating inventory? Between $57 and $57.80. Really, it's $57.70 and $57.80. So 10-cent move still. It's kind of a tight range, but certainly, wash, rinse, repeat with 2 or 3 contracts, you can make a ton of money there. If it loses the floor of 57.60, it probably is going to rotate down. This is the first chart we've looked at that is actually sitting above the anchored VWAP of Friday, right? Now, it's still in negative flow, and we've got a few levels to watch. Upward, value area high, 58, value area low, 57.10 or so. 0 DTE put support at 56.50, and the call wall up at 59.50. That's literally where the chart's been sitting, give or take 50 cents for the entire month. Okay? And could we have a bounce? Yes, but every bounce is going to get sold until it doesn't. So no idea how they're going to keep flows down or keep prices down because there's a lot going on there. So be careful. Dips are buys, but only into resistance. You want to be very careful about your floors there. Okay, let's take a look at gold. So you remember that I did say that I thought that gold had reached its high, and it came dangerously close to breaching that the other day. Where is this? Right? See how close we are? Last time, it's October 20th was the last time we had a high. It looks pretty good, right? A lot of people arguing that gold is going to continue to break out based on what's going on with the dollar. You know, I don't know if, I don't know. I know I'm being very nondescript there. Let's just take a look at what's happening right now. So it is in a buy the dip formation. It's holding a zone. The call wall is 4,420, 4,415, 4,415. The 0DT call wall is 4,440. So they are expecting a push to the north here. If the dollar continues to fade, chances are this will continue to rise. We had the interest rate release, and naturally that pushed it higher, right? Here's Wednesday's FOMC release. Looked to be baked in the cake, but the pullback held the floor, and then it rotated up again on Thursday. Huge rotation here, and notice liquidation break the entire market structure. So we had a ton of correlation into the afternoon events from that liquidation break, but price action has continued upward since then. So what have we got going on? Movement up into these call walls seem very likely. It looks like we could potentially break into a new high where I would have to eat my hat if it happens to do that. But it does clearly look like dip buying. I would just wait for the dip, right? Because the rotations, if you buy the breakout and you don't immediately go for profit, this could get pretty ugly, right? About 2:30 Tokyo time today, that would have been midnight or 12:30 Eastern time, we had a big pop to the upside. And now we're in sideways rotation. We've got a one-day max at 4,398. Rotation down to retest value area high. That's where I think the best buy is. Down here at value area high, 43.35. If it loses that zone, I would not try to buy any dips unless you're seeing a really nice reflexive rotation. Buying in this pocket without waiting for it to rotate back like it does there, that would be not very good. All right, finally, let's take a look at SPY. SPY, has SPY started printing yet? I don't think so. Yeah, maybe it's got one pocket here. What is SPY showing us? Very sideways pressure. Let's get rid of all the annotations here so we can get a more clean chart. Looks a lot like the ES, right? Higher highs, lower lows, trying to hold the bottom. Look at this volume profile here on the side. It gives us a low end of 681 value area low. That is probably going to be dip buying. This chart is underneath its VWAP because it just has not started printing any candlesticks yet. That says 13th, not 15th, Anne-Marie. So it is showing us some kind of dip buying. So it should gap up when it begins to print at 4 a.m. Eastern. And we've got high areas at 683 for a topping edge. Yes. Here's the thing. If in the course of business on Friday, people said, hey, I'm going short and this is my real break, markets are going to rotate downward. If they come in and they see a gap up, they're going to get caught on the back foot and we're going to have a squeeze to the north. Very likely to rotate all the way back up at 689. That flow could be super savage if there are a lot of people trapped short here. So you want to be very careful about thinking that price action is going to do one thing where it ends up doing another. Dip buying, certainly the case, but if you're looking for following the flow, it could catch a bid and then rotate up very, very quickly. All right, call wall, 690 for the 0 DTE, 700, that's the big call wall. The put support, 670, and the 0 DTE put wall, 680. So dips, clearly buy zones. A lot of things are rotating, but it's going to be buy into prior resistance and then anticipate another fade. Price action ought to square itself out, or at least start to get a little bit more choppy for the next 5 trading days, and then we should start to see the Santa Rally come. Remember, Santa Rally normally starts after Christmas. All right, so there you have it. That's it for me. Take care, folks, and I'll talk to you soon.